Let's talk about the Nasdaq 100, stock symbol QQQ. Really rough day for it. There's a lot of bloodshed in the markets today, down 2.8%. This was actually one of the fastest sell-offs that we've seen in the Nasdaq over a 5-day stretch from its all-time highs since September of 2020. So let's go back and look at what that actually looked like. This was your September 2020 sell-off. This was the fastest sell-off off of all-time highs that we've seen since this particular period right here. But there's a lot of technical issues that are developing, and I think it's really important before we start to panic. And I know there's a lot of people out there that are panicking because you could see it on the tape today, especially in the afternoon as the market was selling off. But it's better to step back and figure out, okay, what are we dealing with here? Is there bounce opportunities? If there's not opportunities to bounce, where are the next levels of support? So that's what we're going to concentrate here in this video. We're going to go through each one of these one by one. First off, you have this glaring double top pattern that has formed. You have the previous highs that were established in December, followed by another set of highs that were established here in February. Double top pattern here, pretty much equal with one another. Where does that confirm at? Well, it's interesting because you have some highs that were established in July of last year that connects the dots pretty well here, and we're sitting literally on this double top support. So any kind of weakness tomorrow in a close below current levels is going to confirm this double top pattern. Now, if that happens, what are we looking at for potential bounce areas? Well, before we get to those, we need to back up and see some of the destruction that's actually taken place on this chart first. You had this in the short term, you had this rising trend line here. That got broken back on Friday of last week. So we're about a week later now going into this breakdown. There was no support underneath it. And so now we're sitting at the next logical support level, which is the double top confirmation. We've seen with head and shoulders patterns a lot over the years where you'll get these perfect textbook head and shoulders patterns only for them to result in heavy bounces to the upside. There's still the potential that that takes place right here. You also have another trend line that was violated today as well. This particular trend line goes back to the September lows or the late September pullback, not necessarily lows. We are testing it on multiple different occasions here, and that finally broke down here today. So we tested it here. We tested it back again in January. We tested it the last 2 days, and then finally today we broke down below it, taking us again to the double top confirmation level. You also have this August lows. The August lows is an important marker on so many charts, so it's important to constantly look at what we're dealing with when it comes to this level. For a while, we were riding this rising trend line, and a lot of times what you'll see when the trend lines are steep and we break them, it's not necessarily the end of the uptrend and for the stock in general. It just means it's the end for that slope, that particular trajectory, and they'll flatten out over time. So right here, you had this particular slope on the trend, and it gradually flattened out over time. We broke this one back on Monday of this week, and so now you have to ask yourself, well, are we going to really just keep flattening it out? Maybe this isn't even the bottom. How far does this go? So right now, we'll leave that right there. But where I think is most important is this long-term trend line going all the way back to January of 2023. And so this rising trend line has been tested on 2 other occasions, most notably or most recently in August of last year when we had that huge sell-off. It held that level and immediately went on an incredible ripper to the upside. So we're looking at another return to this rising trend line. And that's what I think most likely happens here is that we're going to test this 482 level. The only thing that's standing in the way of it is this 200-day moving average. And this 200-day moving average, if we look at it, it tested it back in August. Again, those August lows were incredibly important. Not only did it test the rising trend line, but also tested and held the 200-day moving average into the close. And then it tested it back here in October of 2023. So you've had multiple occasions where this trend line has tested and held, and this was a pretty close test of the 200-day moving average as well, and one that you could probably chalk up to being a test on paper. So that's where I think that this Nasdaq is probably headed down to, is this rising trend line. I started getting a little bit short today. I haven't gotten short on the Nasdaq yet. I am short on the S&P 500, but I'm still waiting out to see if I actually get short on the Nasdaq. That could happen tomorrow. I'm not quite sure yet. It all depends on the overnight price action and how we open up in that first 30 minutes to an hour of trading, and whether or not the market intends to bounce the gains from yesterday, or the losses from yesterday, to back to the upside, because we've seen a lot of that in the past. Or is this part of a much bigger pullback? Seasonally, this is one of the weakest times for the market. It's not uncommon to see pullbacks in the month of February. Whether it moves into March or not remains to be seen. One thing I would tell you is that with today's weakness, we are essentially down on the year for the S&P 500. Yes, we've actually seen the market give up all of its gains from January and from the early parts of February. But what you don't want to do, and I tell people this all the time that are looking to short the market, don't load up on short positions in the market. You have increased volatility, which means it's better to let the volatility do the work for you with just a few short positions if you're looking to short the market. You can also avoid shorting stocks altogether and just play the dead cat bounces, because the dead cat bounces in a bear market, if that's what we're going into, I think that still remains to be seen. We need to see how we handle the rising trend line, and we need to see how we handle this double top confirmation. Until those break down, you can't say that we're really in a bear market, because those two levels could easily bounce this market and pretend like nothing ever happened. But looking to get short doesn't mean you go full tilt 100% short. It's better to just do like a couple of positions, or even just one position, and let the volatility do the work for you. That doesn't mean you take on a huge position size. It just means that you have to take more of a cash position and let the exposure that you have to the downside do the heavy lifting for you. If you enjoyed this video, I would encourage you to like and subscribe, and let me know down in the comments below, what is your take with the market right now? Are you liquidating positions? Do you start to feel a little bit of panic right now at these levels? Did today catch you by surprise? 2.7% for the Nasdaq, pretty hefty decline. I want to hear what you guys have to say in the comments. I'll be sure to interact with you guys and give you my thoughts on any questions that you might have. Thank you guys, and God bless.